choosing a financial advisor, very important decision. And I want to walk you through step one of this process because it's actually very tricky because the information available to you isn't quite black and white. There's a lot of gray, but by asking a single question, you're going to open up more doors to yourself in terms of information that can ultimately help you make the best decision possible for you. From this article, do you know the difference between an advisor and a salesperson? You should, but the problem is you can't tell based on their job title. So right now you're thinking, wait a second. No, I want an advisor. I don't want a salesman. Did you even know that there is a difference? Yes, there is. In the financial world, everyone calls themselves an advisor, but no one ever calls themselves a salesperson. So right here, we enter into the gray territory. Everyone around you is calling themselves a financial advisor. Nobody says, hey, I'm a financial salesman. No, nobody says that. In most industries, this is clearly defined, but in the financial industry, the lines can be a bit blurry. So right now, we need to set up that there are two categories out there. There are advisors and salespeople. Okay? Those are the two categories that we need to now distinguish between so that you can make the best consideration possible. If an advisor generates their income from commissions, they are a salesperson. So here we go. We have one model of making money from their end where if they sell you something, what they sell you is going to give them a commission. So that is one way that a financial professional, so I'm now going to use a professional. So a professional could be a salesman or it could be an advisor. But one way a professional can make money is via salesman, via the commission they make, via the products that they sell you. And this is going to be the fees their clients pay each time they make an investment transaction. Now this is key. Each time you make a transaction. So the more moves you make, the more investments you make, the more buys, the more sells you make, those are all transactions. And the more of those that you make, the more commission that they get, therefore the more money they make. So what do you think that does in terms of an incentive level? Is there incentive level to get you to just, be what investors do, kind of just buy, hold, be boring, just kind of wait, sit around? No, because that's not a lot of transactions. If you just buy and wait, that's like one transaction, you buy. But if you're buying and then you're selling and then we'll sell again because we got to buy this over here. But oh no, this over here looks good, so let's sell. I mean, you can start to see transaction. I mean, they start to add up very quickly. It is in the best interest of both the advisor and the firm they work for to generate revenue through transactions. So as just discussed, that's exactly that. They want to create as many transactions as possible, but there's more to it than that. What is common though are the fees are glossed over, such as new issue closed-ended funds, mutual fund loads, sales loads on our REITs, BDCs, and insurance products. Now that's just a mouthful and a way of saying that there are a ton of products out there and all these certain products can have a commission element to them. So the salesman has a great many of things that they can offer to you. And why does a great many of things offering you, how does that benefit them? Well, again, it goes back to, there's this offering now, so let's sell so we can buy that. Oh, now there's this offering. Well, let's sell so we can buy that. And again, transactions adding up and up and up, and that's how they're making money. If you hear answers to your questions such as 100% of your money goes to work for you, or the product company pays my fee, or the insurance company pays me out of their fees, you should be sure to read the fine print. So in other words, the key question that you do need to ask, which still is not quite good enough, is, hey, how are you making your money? I mean, just hit them right with it. How do you make money? And yes, they may give you all these sorts of, in other words, if you get kind of that doesn't seem like a straight answer, then you know what? They are a salesman. They are a financial professional that is trying to sell you a product. And they're not actually any sort of an advisor. All they're doing is advising you to buy products that puts money in their pocket. So if you can't get a straight answer, that would be where let's make sure you read the fine print, because the fine print is all there. Because at the end of the day, one way or another, you pay and your advisor is selling you a product and earning a commission. Now, in comparison, financial advisors that use an asset-based fee, flat fee, or hourly rate, They make investment decisions and recommendations based on what is in your best interest. Now, hourly rate, flat fee, those are pretty straightforward, right? They get paid per hour of what they're looking at for you, or they're just gonna say, I'm gonna charge you X amount, and that's it, flat fee. Now, asset-based though is just, if you're going to have, let's just say $100,000 with them, they may charge you 1% of that. So that's, that would be $1,000 on 100,000. But right there, after that, as you just saw too, as an article commented, they don't care what you're doing. They don't care what your choices you're making per se, because, they're gonna get paid regardless. If you want them to do a bunch of research for you, they'll do it, getting paid by the hour, or they'll quote you a flat fee. Or, I would say in some senses that percentage tied to the asset, that really directs their incentive level, because they're thinking, okay, if we start off with 100,000 and I'm gonna make 1%, what can we do to get this up to 200,000, 300,000? Because if they get it up to that, well, now their 1% is gonna pay them even more. So there you have total alignment in terms of incentives. You want a bigger account, they want a bigger fee, and the only way they're gonna get a bigger fee is to grow that account bigger and bigger and bigger. So that's something to keep in mind, is there is no incentive to let's do a bunch of transactions. No, it's just let's make the best transaction. So it's more of a quality over quantity, right? If we can make one single quality investment that blows up their account and makes it bigger, well, then that's fantastic. But there's no point in making a bunch of small ones because, that's not doing me any good. And now it's doing you good if you're a salesman and making commission, but not in this situation. Advisors that are hourly based or asset fee based allow investors and clients to access their professional expertise while remaining independent from commission based advice. Another keyword there being independent, right? We want to keep things separate. We don't want to have any conflicts of interest. We want everybody's interests to be aligned. And as I've already discussed, there is no better way to have interests aligned than just either an hourly rate, flat fee, or just a percentage. Personally, I don't necessarily like the hourly because if this person's really bad and it takes them 50 hours or 20 hours or 10 hours to work on something, then that's kind of incentive because the person isn't really going to, now they're not going to rush, that's true, but are they going to take really long time? So I'm not a huge fan of the hourly per se. I like the percentage one or just a flat fee. But even with the flat fee, a little squirrely. And that's where things, there is still some gray. And I will commend the writers of this article because they do ultimately conclude that one final comment on fees and commissions, like everything else in life, no one answer is the best for every situation. So even though these people were biased for some sort of flat fee or percentage of the overall asset class, they still they admit that, in some situations, maybe the product is best. And I want to be fair too, because a situation where maybe it is better to have a salesman is if a salesman just gets that one-time commission, but they put you in a product and then that product causes your account to get really big, well then guess what? Your advisor's not going to get a bigger percentage or anything like that. They're not going to continue to get the 1%. They're just going to get the commission that one time where they put you into that asset class and it happened to go up very well, very big. So there's gives and takes, there's pros and cons to everything. So as these people said, to which I fully agree with and appreciate that they said, none of this is, for sure do this or for sure do that. It ultimately comes down to, what do you think is going to be best for you? Where is your passion level at? Do you want to be totally hands-off? Do you want to be partially hands-on? Do you want to be massively hands-on? In that situation, maybe you don't even want an advisor or salesman at all if you're just going to handle it all. But there's a big spectrum there, and you got to figure out where exactly do you stand on it. But at the core, you ultimately first, step one, need to figure out, how are you making money? Because that's going to tell you where their incentives lie with your incentives. And the goal is to obviously have both people's incentives aligned as closely as possible. And depending on your incentives, your goals, that's going to dictate what your ultimate conclusion is. But core is, you first got to identify where the salesperson, the advisor's incentives lie. So yes, they're all professionals. Figure out what category they're in, and then once you know that category, and you can narrow down that by either having to ask more questions or just flat out read the fine print. Or let me put it this way: if you find yourself needing to read the fine print, that person's probably not for you because they're just not giving you straight answers in the first place. So that may be kind of just an early indicator there. But at the end of the day, got to figure out what category they're in so that you can figure out their incentives, so that you can figure out, is that going to be best aligned with your incentives? And then you're going to be in a much better spot to figure out what sort of financial professional you want to work with. So I hope this helps. If there's any questions or anything like that, maybe you have some additional pointers. Maybe you've been in the space before. Maybe you still are in the space and you want to clarify something, or maybe you disagree with something I said, you want to offer up a rebuttal. That's totally fine. I want it to be an open discussion if it needs to be down in the comment section. But I hope this helps. And like I said, comment down below. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.